I know this is the weirdest time since forever ago, since probably the 2008 thing that happened, but that's a totally separate matter. Things are not the same as it was back then, but it's still a weird time all the same. Getting anything really has been a lot more expensive, and I'm not really saying that this inflation is okay. I'm not saying that the price of goods right now are okay. This is insanity for everybody. I will say though that regardless of what's happening, is that we can either cry about it or we can do something about it. So I'm always on the path of trying to figure out how I can make ways around the situation, because the situation's happening. It is what it is, inflation skyrocketing, but there's still ways you can fight it. There's still ways around it. You just have to think a little bit smarter. Now, in order to do this, I wanted to make a video on helpful ways to actually get a home, because regardless of what's happening, when you need a home, you need a home, you know, and I'm always gonna push for buying instead of renting. And so in this video, I wanna talk about how you can actually buy a home in 2022, even with all this madness happening. So the first thing you want to keep in mind, and that is which loan you're going to get. And that's actually really funny for me to say, because whenever you're talking to any agent, they're going to honestly want to hook you up with their lender, and same with me, I'm no exception. But just to be transparent, you should look around to see what lenders are providing, because different lenders provide different things, and depending on your situation, you might prefer a lender over the other. So even though interest rates have gone up, it's actually surprisingly a really good thing, because it makes sure inflation can calm down a bit. So that's good, because you have to think about other expenses that are not just the house itself. Now, going back to what I was saying, that when you are getting your loan, there are typically 3 different options. There's a 4th option, but I'll get to that 4th one later down the line. But the first loan that is probably everyone knows about is an FHA loan. An FHA loan, the great thing about it is, even though your credit score is not amazing, like let's say you have 580, you only need to put down 3.5% for a down payment, which is great, because you don't need to put a huge high 20%. And if you have a credit score that's not the best, but you still want to get a home, there's ways around it. But if your score is even lower than that, like let's say, you know, because things happen, you know, we're all human, things happen. If your credit score is only 500, you may need to actually end up putting 10% for a down payment, but at least there's ways around it. So if you have money and you were just stuck in a weird situation, there's ways around it. Now, if you're a veteran, most likely you already know this, but you actually don't need a down payment. As long as your credit score is like 580 to 620, I think 580 is probably the lowest you'll get for this, but if you do have that score, you can still qualify and not have to put a down payment on. VA loans are my absolute favorite for that reason, and I think it's a great thing that they have, especially because as a veteran, you do a lot, so it's nice to have the little reward when you come back home, and that you can actually get your own home. And then the next one is a conventional loan. Conventional loans are probably by far what most sellers are looking for, because it shows that you are a really qualified person. Because in order to get this, you need to have at least a 620 credit score. If you have more, it's even better. And you only need to put 3% down for a down payment. You won't need to put a lot, and when you break down the numbers, it's actually a little bit cheaper for the other stuff. So that's a great thing as well in the long run. And if you put 20% down on top of being conventional loans, so if you want to go the extra mile, get 20% down on down payments, and then you have a credit score of at least 620, you won't have to pay PMI, which is private mortgage insurance, which is just insurance for the lender to make sure that they'll still succeed even if you default on your loan, meaning you don't pay it, or so whatever happens, you know. So this insures the lender, not you. And so by paying at least 20% down in the house, you won't need to pay that, which is great. So there's an extra bonus if you're getting a conventional loan. Now, if let's say your credit score, and let's say things are really bad and you're in a sticky situation right now, I highly recommend a credit repair agency to help you out. Having somebody look at your finances, or even having a financial advisor, but just having somebody look at it and help you break it down, because there's a lot of things that go into a credit score. A majority of it is just paying on time, but there's other ways around it. I actually made a whole video talking about how to repair your credit score right here. Look at it, but I also recommend finding somebody who can look at you personally and really break it down for you to match your situation. If let's say you don't even have any credit built up, well then I recommend getting a credit card. Now there's credit cards that I got when I was like young, like an 18-year-old, I believe it was. I went to my bank and I got a credit card, but I had to put a security deposit on it. So I put $300 down on this for a security deposit, and therefore I got a card that had credit up to $300. Now I only use this to pay off gas, and it was honestly like, I was using like 10%, I would say average. I know gas is probably a bad example right now, but just get something on there that's not too much and then pay it on time. Trust me, your credit score will skyrocket, and then you can get an actual credit card and you can just build from there. A second tip for this, and that's understanding that there's three major things that you want to keep in mind when buying a house. Now, this is regardless of what happens in the market, but these are three things to keep in mind. So unless you're a veteran, you will need to put a down payment on. So the down payment will be 3% if you're getting conventional, 3.5 for the lowest if you're getting FHA. So keep that in mind, but not only that, but understand there's closing costs as well. Closing costs, that's totally going to differ and change depending on how much you put down and what the situation the house is and financing and all that. So it totally depends. So I can't give you like I can't even give you a general answer on that, but understand there's our closing costs. So whatever agent you go with, talk to them about it and they can help you break it down for your situation on the house or the lender, whichever really you want. But a third one you want to keep in mind, and that's the earnest money deposit. Now, earnest money is typically about like 1% of the overall home, and it's just to show good faith. So once you actually find a home that you love and you are going to put an offer in, when your offer gets accepted, they'll ask you for earnest money. Now, the way I like to break this down is the easiest for everyone to understand is that, so let's say you're proposing or you're getting proposed to. When the dude proposes, gets on one knee, typically they have a ring with them. Now, that ring is basically showing that I am serious about marrying the person. If they get on one knee, they don't have the ring, it doesn't mean that it's like not true, but it shows that they're not as committed or they're not as ready. And so by having that ring, it shows that you are serious, you're ready, and you are in there for the long run. And that's what an earnest money deposit is. It's just 1% of the overall home so that you can show that here is some money, I'm serious about this, I really want to go through, and I want this house. So those three things, keep in mind when you're saving up for a home. Now, I know that this is a lot for a lot of people, and I understand that we're in a weird situation right now, so it's even more expensive for a lot of people. So I highly, 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 highly recommend in this year and even coming into the next year, get some side hustles. Do something on the side from what your typical job is or career. If you have some time you can squeeze in. I know that when you have kids, it can also be a little bit difficult in this way too, but I highly recommend doing some sort of side hustle that you can somehow work into your schedule and in your lifestyle. For me as an agent in this market right now, not every day I have something going on. And so in order to keep myself productive, I also do Uber. So I take my car around. Now, when I'm out showing houses, once I'm done showing a house, I'm typically on the other side of Las Vegas. And so in order for me to get home and not have to waste that gas, I end up using Uber and I have my destination set to my home. And then usually there's somebody that's in the direction over there anyways. And so I pick them up and we go in the same general direction. I go home, drop somebody off and make a couple extra dollars. Now, I also do photography on the side. And I do this for some people and it's also good money because I've developed the skill over time. So if you have skills, if you have any sort of skills, I recommend really using them and getting yourself some extra income because it's tough for everybody right now. And so by having a little side hustle going on for you, it really will help in the long run and you will see. Okay, I think we're on number 3 now, and that is, what is it? And that is to have the end goal in mind. Why are you getting this home? Now, a short answer probably would be like, well, I need to live somewhere. And that's true, yeah. But what are you wanting to do with this home? Are you actually gonna be in this home for the long run? Because see, people here in Vegas, they move typically every 5 years. And a lot can happen in 5 years. So that's career change, family moves in, you need a bigger home, you made a family, you know, things change. And so by understanding that when you are getting a home, if let's say you're gonna get a condo, like I got a condo for my first property. Why? Because I eventually want to turn that into a rental property. Or at least I want to take it, build equity on it by painting it, by renovating it, building stuff onto it, you know, adding equity, adding value to it so that when I do decide to sell it, I have some more money that I can then get an even bigger home. Now, that can be for your case, but if let's say, if I want to stick to my rental routes, then I can add some cash flow to my, you know, my income, and then I can also get another home down the line by saving up money for that next home. When you are getting a second home, you want to have money tucked away so you can get that and then sell the home, and then that can be a bonus to whatever you have right there. So it's different strategies that you can use. But if you really just want to have this and then stay there for like the long run, well then keep that in mind too, because you cannot change the location of the home, but you can always renovate it, but you can't make more space. You can only control the space that you have within it. Now, the fourth thing to keep in mind, and this applies for any market really, but I think especially now in 2022 because things are just different in this world, and that is to keep a consistent job for like 2 years. Whether that is an actual job for 2 years or you have a business for 2 years. When you have the fourth loan that I really wanted to talk about earlier in this video, and that's called a bank statement loan. I actually just really recently kind of figured this one out. This is for honestly people who are self-employed. So if you have a business and you have done it for 2 years and you have at least 3 months of bank statements that show positive income, they can actually approve you on that income. And so if you ever self-employed, you can go that route. But if you have a job, you can honestly go the other 3 routes. And these are not exclusive, but you have to understand what your situation is because you'll get a different loan depending on what you're doing. And so with that in mind, by having those two, regardless of what happens, it's typically 2 years because these banks want to make sure that you are consistent and you're not flopping around. If you're a waiter for 3 months and you become a construction worker for 2 months and you decide to become a salesperson for 6 months and you're flipping all over the place in different categories, they're not going to see you as a consistent person. So they want to see that you are in it for the long run and that you are able to be sustainable with any career you go into and you're making positive income, then they trust you more when getting a loan. So regardless of the market, but I know that right now everyone's working remote. And so this is something that's been a change. And so understand that regardless of what you're really doing, if you're moving into the city for work, if it's the same company, you don't have to worry as much if you actually have been there for a couple of years. And because again, people are laying off people because the economy is wild right now. Even Elon Musk is slowing down his hiring process. It's something to keep in mind. So whatever you do, stick with it and be in it for the long run. And the final tip, honestly, and that is that you do not need to keep saving money constantly if you have money tucked away good enough for like 6 months to a year. Because seriously, investing your money will bring your money so much more distance than just having it tucked away in a bank account or under your mattress. The thing is that because inflation's going up about like 7 to 8%, I've seen, it's something that your bank is not gonna ever, not even a regular market, is ever gonna keep up with that inflation. Because inflation typically in a healthy market is 2%, and even the banks can't even compete with that, let alone to 8. By investing your money into stocks, into real estate, if you want to get into that, or honestly, you don't have to go into actual properties. You can buy land and then resell that land. Sometimes there's actually more value in the land than the building itself. But regardless, if you want to go into the NFT route or whatever, but by having investments, it will build your income that can beat that inflation rate. As long as the income that's coming into you is increasing by 10%, even if the inflation is at 8%, you are still winning by 2%. But if your money is tucked away in a bank and you're only making like 0.01% really in your bank and inflation is at 8%, you're never gonna win. And the money that you have right now is not gonna be the same value as it is gonna be in like a year. You need to understand how the market is and you need to attack it and start working towards your dreams and getting yourself out there and making more money and fighting this wild economy we're in right now. Now, I really hope you enjoyed this video. I hope you found any kind of value into it. And if you did, please let me know in the comment section below your favorite tip, or if you have your own tip, because I'm so open to options, let me know down in the comment section below, and I'd love for everyone to see it, because this community we're supposed to be building is supposed to be on just understanding what the world is right now and how we can help each other to work through this. And also give me a big thumbs up down below, or give me a big dislike down below. I just want to know what's working, what's not working for these videos. So by giving me those suggestions and letting me know how you think about it, it helps me tremendously. Just rate it. But anyways, thank you very much for your time. I appreciate you sincerely, and I'll see you in the next video.